who haven't joined us can play catch up, but good morning, everyone. Thank you for joining. I'm Richard Hopkinson-Woolley, aka Hoppo, as most people know me, and I'm going to do my very best to moderate this morning's session and the panel of experts we have in relation to the subject of funding solutions in a rapidly changing world. So first of all, I'd like to thank all of you who've joined us. Looking at the list of people who had registered yesterday, I note there are a number of you who I know have attended previous breakfast briefings that we've held at City Point over the last few years in relation to Ipsx and the journey from, I suppose, conception to birth. It's been a fascinating journey to watch, and I've been very lucky to have been there from the very beginning, about 5 years ago. But coming now to the present, the last few months, of course, have seen a lot of upheaval in the real estate market across all subsectors. And we've seen repeats of things like funds closing for redemptions, like they did after the GFC, and other issues for funds around liquidity. There's also been quite a lot of talk recently about hybrid funds, funds investing in equities, as well as bricks and mortar, to get exposure to real estate. So the questions I suppose we're going to look at today are, what are investors looking for? More reliable income perhaps, given the fact that so many companies have suspended dividends in recent months. Is there an appetite for IPOs in the current climate? How successful perhaps have traditional property companies been in raising capital, SEGRO, Supermarket Income REIT and the like? Is there going to be an exodus to the Southwest and other regional markets, perhaps, following these few months? So these are some of the questions that we expect to be covering in this morning's session. We're not proposing a series of monologues, you'll be pleased to know, I hope, but rather sort of fireside chat. It might get into a cat fight, we don't know, but we'll see how well the panelists behave. We'll try to address the questions you may have on the chat as we go or at the end, but it's going to be pretty fluid given the nature of the panel. So without further ado, let me please welcome all our panelists, and perhaps you'd each acknowledge as you go, although I think our viewers can see your names on the bottom, but Roger Clark from Ipsx.
Good morning, everyone.
Dan Bishop from JLL.
Good morning.
Andrea Tompkins from Simmons & Simmons.
Morning, everyone.
And Richard Croft from M7.
Morning as well.
So before we get truly stuck in with our session this morning, we're going to have a bit of audience participation, and I'm going to ask you 3 questions. And if you could please vote, it will just maybe give the panel an idea of who we've got on. So the first question, please. Are you currently considering raising equity from real estate that you own? And that, please, if you're advising asset owners who are doing so, please answer on their behalf.
I've just been told that panelists can't vote. Shame, I was going to answer that question. The answer is yes, by the way.
Just holding on, ready for someone to do the magic and tell us what the answer is.
42.
Douglas Adams. So yeah, so here we are. So 66% say they are, and 34% say no. So maybe those 34% are going to be investing instead. The next question is, do you think in the next 3 months you'll be looking to raise finance for real estate projects? And again, if you're advising asset owners, please count yourself amongst those.
So yes from us as well. So just even though we're not allowed to answer.
So so you're doing it now, and you're doing it in 3 months, Richard. That's good to know.
Yeah, we just keep doing it. It's what we do. Cass has answered yes for me, so that's good. So we cheated. We did answer.
Good. Our results? Oh, yes, even more. That's promising. Good. So 82% of you are thinking you might do so in the next 3 months. So you're enjoying your little sabbaticals and just going to get back to doing things in the next few months, which is good. And finally, given the fact that this is a Southwest themed session, do you think the Southwest market is well placed to see growth in asset values?
Cass, can you answer for us? Yes.
Perhaps we'll score the panelists at the end as to how they think we all did. Oh, there we go, Southwest. So that's very promising for those people who are in the Bristol and Southwest market. Dan Bishop will, I'm sure, say a few things about that as an expert in that area later. So before I am accused of succumbing to a monologue myself, having just said to everyone that we're not having a monologue, this will probably be the last time I get a word in, so I might as well have my fill. Let's crack on with hearing from our experts. So Roger, turning to you first, how can Ipsx answer some of these questions? And perhaps taking into account there may be people on this session who haven't heard about Ipsx previously, perhaps you briefly explain what it is, what the progress has been made over the last few months, and where you see the demand in terms of likely investors.
Yeah, thank you, Hopper. Well, Ipsx is a property stock exchange. It's a stock exchange like any other that everyone is familiar with, where companies list on our exchange having been through a rigorous process of a pre-approval by the FCA. So it's a very high standard of diligence and preparation that's done for everyone. The companies list on our exchange, the seller of the asset raises money. But then importantly, those shares are fully tradable in a secondary market, which is governed by market makers, quote-driven market making. You mentioned earlier, Hopper, about how we've seen funds closing and gating again. And that's probably the single most important thing to highlight here about what a stock exchange for property will do. It'll mean that you can always get a price at which you can always trade your investment in real estate. So that is the brand new thing that we're doing, listing single buildings. It's never been done before successfully, and we're the only exchange in the world that's doing this. You said, what developments have we had in the last few months? Actually, we've been very busy during the COVID lockdown. We've been completing the building of the infrastructure, and it's a heck of a lot of infrastructure that's needed. You mentioned again that you've been watching Ipsx for 5 years, and it's taken 5 years, not because we're lazy or a bit rubbish, but because the FCA quite rightly sets the bar incredibly high. There are only 7 recognised investment exchanges in the UK, and they include the London Stock Exchange, the London Metal Exchange, all of the exchanges in London that have been around for decades, in some cases centuries. So it's taken us a long time to get that level of approval, but we have it now. We have data provision coming from Morningstar. We're in the process of finalising connectivity with Fidessa. Our trading technology comes from NASDAQ. So all of the things that you expect from a major stock exchange are being finalized and put in place. We're building out our membership. We've got lead advisors signed up, market makers signed up, approved valuers. As a property stock exchange, we thought it was important that the agents, the valuers, became members of our exchange and bought into what we're doing and how we want information to be disclosed and spread to the market. And we've got retail brokers signed up as members of our exchange, which again is a really important development to democratize and open up real estate to everyone. Of course, most importantly, we've been finalizing and developing our pipeline, and the first IPOs are now coming in September. We would have done something. We had planned to launch the first IPO at MIPIM back in March. Obviously that didn't happen. That's slightly delayed things, but you know, your question, is there demand for IPOs? Absolutely. I think it's really interesting, just the last point I'll make, I think it's really interesting that during Q2 this year, we saw investment volumes in the direct markets fall to low levels that, according to Savills, have never been seen before, lowest ever levels of investment. And yet in the listed markets, we saw money being raised for real estate companies of nearly £2 billion, which is up 80% on last year. There's a huge demand for listed real estate, huge demand for it because it's transparent, it's liquid, you know what you're buying, and you can sell when you choose to. So yeah, we are poised and ready to go with the world's first property stock exchange.
Very, very good. So thank you, Roger, for that update. Richard, come on, what attracted you to IPSX in the first place, both as an investor in the exchange and also as a potential issuer?
Lots of things, but let's say as an investor, first of all, I absolutely 100% believe that there is a huge market demand for tokenization of real estate. And people confuse the word tokenization as to what it really means. It doesn't mean blockchain. It means, split ownership. And the reason why stock exchanges since the 1700s have been really popular is people like public ownership. They'd like to be able to participate. And it's no different in real estate. If you go and talk to hundreds of people about what they really want to own in their portfolios, a lot of people want to own commercial real estate. But at the moment, unless you're very rich, owning commercial real estate is not really viable because even the smallest assets are worth, a few million. And the bigger assets obviously are worth hundreds of millions. So it's not really available. People want to, so they can either do it through their pension funds, through large REITs, or things like the open-ended funds. Well, they all come with issues, open-ended funds, liquidity, the pension funds, sometimes you're not always going to agree with what the manager wants to do. And certainly that's true of the REITs. If you look at the performance of the major REITs, they've always traded at or often traded at big discounts. And one of those reasons is that, sometimes there's a discount for management. You look at the cost of some of the main CEOs in the real estate sector, who haven't always got the major decisions right, if we can put it like that. You're paying them millions. And a lot of people just don't want to do that. And that's one of the reasons why there's been a discount. Being able to buy shares directly into the real estate itself with fixed management costs, that is really appealing to an awful lot of people. So, it's public knowledge that we will be listing the Mailbox very shortly, which is a big building we own up in Birmingham. And for those people who are saying, offices are coming to an end, I mean, I say you're wrong. But you're wrong is because, human animals need to congregate. But where people are right is that affordability is going to play a really big part. It's one of the reasons I think people believe the Southwest is going to grow. I'm quite bearish London, but quite bullish the regions. The Mailbox were coming to the market, at sub £300 a square foot, and with a dividend yield of 5%, which will grow to 7% relatively quickly. And I look at a building like that and know that people can participate in that liquid participation. And I know that that is exciting to people. And if we, over the next year, can have 100, 200 buildings listed on the exchange, and that's very much our ambition, people will be able to build their own property portfolios. I know most of you probably talk to your friends. That is what people want. And with the wholesale market, which is the other market that IPSX offers, institutions will be able to access again REIT status, which is really important because tax transparency is going to be the key to a lot of real estate investing, particularly as a lot of real estate investments have to come onshore. And there's going to be the two markets, Prime, which is for private individuals to be able to participate in tokenization of real estate, not blockchain, but genuine tokenization, which is share ownership. And then the wholesale market, which is for institutional investors. And, nothing like this has ever been done. So as an investor into the exchange, which we are, as we've invested quite a lot of money in the exchange, and I sit on the board. It is something that the market needs and wants. And for those people who predict the end of the office, we think you're wrong. And one of the things to remember and why people want to invest in real estate is this very simple rule. One of the reasons the stock market is performing so well is people need income. One thing in a world where 0% interest rates or negative interest rates are going to be the norm, income is everything. But if you buy you buy a stock at the moment, the dividend that company can pay comes after the rent that it has to pay for the buildings it occupies. So if you really want exposure to the cash flow of businesses, you're much better off buying the real estate because dividend happens after rent. And I want everybody to remember that. So, if you can invest directly through a stock exchange directly into the real estate, participate in that rental stream, that is going to be the best way to access income over the next few years. Something that I wholeheartedly believe.
So you're clearly very keen on this whole thing, Richard, and we've heard from Roger that we can expect the first few IPOs in the next few months, and hopefully then there'll be a head of steam built up, and Richard will still be doing it in a few more months.
Well, I mean, the mailbox isn't the only building that is about to be listed. There are a number of others. We can't talk about those just yet, but including another one from M7, which we might get to read about in the press very shortly. But there is a huge wall of momentum. This has the ability to fundamentally change. When I say this, I mean IPSX, fundamentally change the capital markets.
Yeah, I think it's, as you know, very exciting and good, nice to be there at the beginning and see how this is all going to work. But just for the benefit of those on this morning who may not have be so up to date, perhaps we could just talk, Roger and Andrea, perhaps about what the process is and how you can compare it. If you're a current owner of a nice shiny building, or not shiny building, but and you want to dispose of it or raise capital, what's the process then for an IPO on IPSX? Perhaps Roger, you could start with how long you think it takes, and then perhaps Andrea, we could touch on some of the technical side of it.
Sure. So, I mean, at its simplest, and Andrea will explain this in far more expert detail than I could, but at its simplest, the process is the same as for listing a company on the London Stock Exchange. The UKLA, or the part of the FCA, is the listing authority for IPSX, just the same as for the London Stock Exchange. So process is the same. How long does it take? We think it can be quicker than a lot of people expect. Ordinarily, you'd say an IPO maybe takes 5 months. I think that when the FCA is used to seeing what we're doing and is geared up to pre-approving these documents quickly, it could possibly be done as quickly as 3 months. And that compares very favorably with a direct sales process.
So clearly then it's a regulated exchange. There are rules like there are for the main market. So Andrea, just what are the basic requirements for an IPO on IPSX?
Sure. As Roger mentioned, excuse me, as Roger mentioned, the process is very similar to the existing process for a company looking to IPO on the London Stock Exchange. There are 2 segments on the IPSX, Prime and Wholesale. Prime is geared towards retail investors, and you would typically have a prospectus that would go through the FCA review process. So expect, completely agree with Roger that, the process for a Prime deal would likely to take, 3 to 4 months, given that the FCA review process. Wholesale is geared towards institutional investors, and that would probably be somewhat of a shorter process, somewhere between 8 and 10 weeks. The 2 segments do have somewhat different requirements. Prime is designed for properties that have a valuation of at least £50 million. On Prime, issuers need to appoint a lead advisor, a market maker, and an approved valuer, and have valuations published every 6 months on their website. Wholesale, the same requirement for an approved valuer and a lead advisor. If there are cornerstone investors in a wholesale listing, then there's a requirement to have a wholesale broker rather than a market maker. But that's generally the process. It's there are application forms similar to any other London listing. The process is very similar.
Yeah, so I think, because the other thing we haven't mentioned, of course, is there's a 25% minimum free float. So you have to be prepared to sell at least 25% of your asset. And it gets, my understanding is it has to be in an SPV in the first place. So if it's not in one, you're going to have to move it into one. And quite a lot of the work, by all accounts, that you would be doing for an ordinary disposal in terms of preparing a certificate of title and such like is going to be done. So you could run this in tandem, presumably, with a more traditional sale. Would that be right, Roger?
Yeah, and again, it's something we see in other sectors of the stock market. People may be familiar with the phrase a dual track process, where you can sell a company by either doing an M&A deal or an IPO. You can do that on IPSX, because remember, these are companies. As you mentioned, Hopper, they're SPVs. So if you sell 25% of an asset, actually what you do is you put the whole asset into the company, and you then retain 75% of the shares in a company. And that's an important point, because that now means that retained holding, you have a great deal of flexibility. You can sell another few percent in 6 months' time. You can sell down in tranches. You can even buy more back if you want.
Or buy back, yeah, if the price is right. Yeah, no, that's true. So I'm not sure who to address the next question to, whether it be to Roger or Andrea, because I suspect there'll be different questions. But in terms of the costs, because they're clearly going to be costs, we all generally know what the costs of doing a traditional sale are. What are the costs for doing an IPO and IPSX going to be hugely more? What do you think?
No, they're not. Because the costs, as Andrea and I mentioned earlier on, the process is the same. So you have to pay a lawyer, you have to pay an investment bank to sell the shares, you have to pay a valuation agent, you have to pay an accountant to produce the financial reports and memos. But it's all the same. And what is the cost? I mean, the buy side kind of sets that for companies like this at around 2 to 3% of the market cap. So those are the costs. And again, not much more than the other sales.
Well, clearly Richard's not been put off by it, which is good. Okay, let's bring in Dan, because Andrea mentioned the need for regular valuations. So how do you think investors are going to cope if we see repeat upheaval like we have in recent months, and maybe as a general market comment about how valuations have been dealt with in recent months?
Yeah, I think it's a very interesting point. I mean, it's clearly on everybody's mind that, it could be a real possibility. There's a lot of talk about this second wave and lockdowns, and that general uncertainty, is a real threat. I think, just considering that and, where we are at the present, I think, just across JLL's business, there's a healthy amount of activity in most parts. Clearly not quite at the levels we saw pre-COVID, but our capital markets teams have got a surprising amount of kit under offer, and they've successfully sorted out some off-market deals.
Dan, can I just ask, can you try and either get close to the mic or just speak more, because we can just hear you, I think, but just for the benefit.
Okay. I'll lean in a bit. So that to me means that, with the exception of a large chunk of the retail sector, that the fundamentals in many of our key property markets are actually still pretty strong, and there's a good degree of comfort we have there. The uncertainty thing is difficult, I suppose, and then in most cases where we have that, you'll see a flight to quality. So that really means that prime assets will be less affected than more secondary properties. And industrial logistics, almost a growth area, albeit that there is some impact on value. And that sector might actually have some benefits from COVID going forward. But I think, for even a medium-sized investor to have that flight to quality and go for prime assets is easier said than done. And as Richard mentioned, just by purely on lot size and affordability for most people, that's not often the case. That's just something else to think about. We've already seen an issue of rent payment for some tenants, and that this has been both genuine and opportunistic, particularly in the retail sector. And most landlords are seeing this as an opportunity to renegotiate or extend lease terms in exchange for a small amount of rent-free or some sort of concession. So yeah, I think values have been expected. Worst hit retail, offices less so, and industrial values are supported by decent occupier and investor demand.
Can I just actually just add, in our experience, as you know, we manage a fair few billion of assets. Actually, there's been almost no valuation degradation at all in the sectors. But unfortunately, we're not really in retail.
Yeah.
Retail warehousing, which we're quite bullish on anyway. But shopping centres, I would agree with Daniel. They're on palliative care, to be honest. But the majority of the asset base, office, industrial, particularly, there is absolutely no valuation degradation at all. And the primary reason for that, the same way as the DAX is back trading where it was at the beginning of the year, Nasdaq's in record territory, is two things: TINA, there is no alternative, and B, ZIRP and NERP, zero and negative interest rates. So as a result, there is a wall of money that is being pushed towards real estate. There is a real understanding amongst professional investors that rent becomes before dividend. It's really important. So you've seen Norges, I think, announce that they were going to expand their exposure to real estate. We've seen a number of the major institutions say that.
I suppose, yeah, I was going to say, but it sort of begs the question, really. What are investors looking at when they're going to invest into IPS, a company listed on IPSX? My feeling is that they're going into it, and you've already touched on this, Richard, more for the income, reliable income, more so perhaps than capital growth and thinking they're going to flip the shares.
Just stop there, just a second.
You disagree?
No, I don't disagree, but you're only telling half the story. If the most exciting thing about real estate is income, then it is the dividend itself that will be traded. So, if you know that you've got a reliable cash flow, the same way that bonds go up and down in value depending on the relative yield, so we're going to see the same with real estate. So if you can back a good manager, and obviously I think M7 is one of those, in a good building, you can buy directly in there. What you're trading is the dividend. And the real estate industry needs to understand that it actually is the largest industry in the world.
The point is, it's an income it's backed by an asset, and that value of that asset is obviously underpins the security of that income stream. But ultimately, a little bit of fluctuation in the value of that underlying asset probably shouldn't scare you off.
No.
I mean, Dan, you've touched on it, Richard, about the management team. Let's have an objective view from Dan as the valuer. So when you're going to look at assets listed on this exchange, what are the key things that are going to impact on the value? Obviously, the income stream, but how important is the management team going to be?
Yeah, I think. Well, I think the easy answer is all of them, really: the asset, the management team, and the tenant and the security of your income. I think if you're investing in shares, then you need to have a good understanding of that management team. Understanding of those future trends in that sector as well, and also to consider what might happen to the value of the asset as the lease shortens, as well as possibilities for rental growth, because that's where your returns are going to increase. I think if you're buying shares in a strong asset manager and management team is important, because you're less hands-on than you would be for a direct ownership.
So I mean, Richard, it's quite interesting, bearing in mind the sort of the management team. So why in particular would you choose to list on to sell a property through IPSX rather than a traditional sale? What's driving that for you?
Well, most of the buildings we were selling, we would quite like to keep a bit of participation in anyway. So that's just for us. But it is opening up capital markets to a much wider field. So, if as a investor in real estate, professional investor in real estate, if I was offered the opportunity to have a small target market or the ability to have a much wider market where, I can keep a little bit of participation if I want or not, as the case may be, but I am able to sell an asset based on its cash flow and based on the fact that there is a lot of interest in tokenization, why would I not go down that route? I mean, if you can dual track it, but the reality is I believe there is huge demand for the basic product that IPSX is going to be creating. So why would I not want to access that market? I mean, I'll turn it on you. You say, why would I do it? Why would I not do it? It doesn't make any sense not to include that as part of the process. So, if you want to achieve best value, not only on the exit, but also continuation, because for a lot of companies like us, we're going to be keeping the management. All we are doing is massively expanding the capital markets that are available to us. It's crazy not to do this. And the demand, as I say, I'll keep coming back to demand. The investor demand is substantially there and is going to grow. And this is about income. And it is genuinely the most exciting thing to happen in real estate ever. I kind of feel like we've invented the wheel. That's how
I can see the particular attraction. If you're a developer who's built a nice shiny office and created, got it let, etc., but it no longer fits your investors' requirements because they're looking for the next development deal, why not hang on to your nice new building, list it on IPSX?
But you are making the mistake of looking at it just as, if you don't mind me saying, just from one side of the market. The thing that I'm most excited about is the huge demand that there is from the general public and from professional investors to be able to participate in a much wider range of real estate than it can at the moment. Because even if you're a big institution at the moment, you can only own so many buildings. Here, it allows, and I'll use the phrase again, tokenize. The tokenization of real estate, it means that you can own much more, a much wider and a much more diversified portfolio than you can if you're buying single buildings. And so, from an actuarial point of view, that's exciting. From an individual investor point of view, that's exciting. So, genuinely, right now, I cannot see a reason why IPSX won't revolutionize the capital markets of real estate.
One thing we haven't, I think, covered, Andrea, maybe it's just doesn't have to be, and Roger, jump in as well, please, if you will. It doesn't have to be a single asset. You could have a portfolio of assets with either the same tenant or same geographical location or some common theme to them. Is that right still?
Yeah, our rule book talks about multiple assets with a degree of commonality. And that commonality can be defined in a number of ways, as you allude to. It could be the same tenant. Could be, for example, it could be a hotel chain with the same operator. It could be a series of local food stores. So, for example, Tesco Metros would be common, but a mixture of Tesco Metros with Tesco Extras wouldn't. I think the thing we're trying to achieve there is it comes back to this really important thing that people are able to choose the asset rather than as in effect at the moment, if you buy, for example, shares in land securities, you don't know what you're getting. You don't know what they're going to do next year. You're effectively backing a management team. And we want to give people the chance to choose assets. So as long as those common multiple assets can all be understood as one, then we think that still fits the bill.
Yeah, and just picking up on Andrea, the 50 million valuation that we talked before, is that for the portfolio of assets or each asset?
That's for the portfolio.
So if you have a group of properties that are less than 50 million in value, you can still come to IPSX for that. We talked, Richard and others, about the process at the beginning. I know from previous experience when we've had these sessions live in City Point that members of the audience have often asked, well, what happens 10, 15 years down the line when there's something, the property's getting tired, there's lease events coming up, tenants going. What happens at the end of the life of the building, or at least at the end of the life of that initial income stream?
It depends very much on the building. I mean, there is no generic answer to that. But I mean, that's true of every real estate investment, whether it's listed or not. What happens at the end of the leases? So, either the building is redeveloped, it is sold, it is released. And, one of the things we're doing in the prospectus for the mailbox and for the other buildings that we're considering listing is absolutely addressing what is going to happen to the building at the end of the lease term. But there isn't a single answer.
But isn't the point, though, that the individual investors can decide, okay, we're seeing this coming in, we're going to sell, there's always a market, is there not, Roger? That's the whole point of it.
Hold on a second, but it just, you can still do that, because remember, the SPV is the owner of the building, okay? And so it's no different to owning shares in British Land, except for it's a much more efficient way of doing so without all of the you know, without all the other things that you have to earn if you participate in British Land. Here, you can just participate in the building that you are participating in, and there will be a plan associated with that. You know, any manager is going to be looking that far forward to say, you know, this is what we're going to be doing in the building in 10, 15 years time. You know, by the way, which is something that's discipline that we have for every building that we own. We have a 15-year to 20-year rolling program of, you know, this is what will happen somewhere down the track, you know, because even as an investor that we're going to sell the building probably earlier, the long-term future of the building is absolutely key.
But the intention is, though, that the shareholders can sell, there will be someone to buy, management could buy back, and at the end you could buy, the company could all be back in, be taken private,
yeah,
and you start again. Very simple.
All of the above, you know, just because it's listed doesn't mean to say that your options are any different.
No.
Or you could recapitalize and reinvest in the property as well.
Yeah.
You know, you could have a rights issue to raise more money to redevelop the property.
Or presumably eventually you could just, there could be a resolution to actually sell the property.
Totally.
At the end. So
yeah,
I think a lot of people in the past have got hung up about what happens at the end of the reliable incomes, you know,
but then in that case, they shouldn't be investing in real estate at all, because that's true of every building.
Now,
and, you know, one of the things that any investor does is have a look at what any good investor does is have a look at that. And, you know, what is the future of that building, of that site, and you can still sell the SPV.
That's the really important point. Is this is still just real estate. And that's a really good thing, right? Because when you buy shares in British Land or Land Securities, you're buying shares in a portfolio within a REIT. Again, I come back to this point, you don't really know what you're getting. Here, it's you're buying a building. And as Richard says, you still need to manage that building. The asset management is still important, but it's very transparent and clear what you're buying.
Okay, look, we better move on. We have started having some questions coming in. I've also noticed we have lost 3 people who've dropped out. Obviously, we're not entertaining them enough. So do keep the questions coming. We will cover your questions, but before we do, I think it'd be quite useful to sort of touch on the Southwest and perhaps as well as the Southwest and other regions. Dan, you could touch on, you know, other particular, well, we all know, we've already touched on the fact that there may be particular asset classes doing better than others, but thinking about exoduses to the provinces, is that likely, Southwest in particular, and what's the Southwest got going for it? And speak up, please, Dan.
as we always say, Southwest is best. You know, the Southwest has got quite a lot going for it. It's not far from London, and the rail improvements have cut journey times recently. You know, we've got some very strong universities. And incidentally, numbers are up for this academic year, despite everything that's going on. We've got a great number of high-tech employers, such as Airbus, Rolls-Royce, Dyson, and that helps retain a lot of our emerging talent from these universities. And of course, there's a great presence of key professional services within Bristol. It's still a reasonably affordable place to live. It's got high forecast of population growth over the next 10 years compared to other regional centres. And, you know, it's a nice place to live. So I think that's all great. Do we think we're going to see, you know, a mass flock to the Southwest or other regions for that reason? I don't know. You know, if you look at our own office occupation since lockdown's been easing, then, you know, there seems to be a lot more movement and people re-attending offices and being out and about in city centres in London. And I think that's purely down to the fact that, you know, nobody's reliant on public transport, so it's easier to drive to work, etc. So I think at the moment, you know, that probably goes in our favour. But you know, I think, you know, post-COVID, I can't see why, you know, London will change significantly, and why we would see a mass exodus to the regions, really. You know, London is still very important.
Okay.
I don't know what you think, Richard.
I think, of course, London's important, but I think it's becoming less important And, you know, I mean, by the way, I thought that pre-COVID, I thought affordability was going to drive people towards the regions, connectivity was going to drive people towards the regions. You know, the fact that I'm sitting in Suffolk at the moment and I can do this because the internet has changed a lot of things, you know. So, of course, London will continue to be a dominant city, but it's not going to, in my opinion, it's not going to dominate the way that it used to. And, you know, the regional cities are going to play much more now. Number of reasons. One, because, you know, the government has you know, struck a Faustian pact with the rest of the country that it is going to spend much more money in the regions than it is in London. And it is also, you know, I say because of connectivity, affordability plays more. We don't all have to be in the same place. So I think, you know, the cities of Birmingham, Bristol, Leeds, Manchester are going to catch up value-wise because, you know, I take the mailbox, for example, you know, rents in there are £25 a square foot in comparison to 75 to 80 in the City of London and 100 plus in the West End. And the 4 to 5 times multiple doesn't make any sense.
Moving on, because this was very well scripted, as our audience is probably well aware, and we've very well rehearsed, as you can tell. But we've had a question which was going to lead on to my next sort of topic, which was with the recapitalisation of UK PLC post-COVID, is IPSX suitable for owner-occupiers as an alternative to sale and leaseback? And actually, that's something.
One word answer: yes.
But I mean, let's perhaps sort of just think about that more fully, because actually there are quite a lot of advantages. Roger, perhaps you'd like, because I know you've spoken about this at length in the past, that actually this could be this. I mean, Goldman Sachs could have done this instead of selling the whole lot and losing control, couldn't they, and getting rid of their crown jewels.
Yeah, exactly. I mean, we touched on it earlier on. It's this flexibility. It's the fact that you can retain the operational control over an asset that you need in your business. You can retain some economic interest in it, which is important for a lot of people. You can increase that economic interest. That's the thing that we're finding a lot of finance directors, but particularly CEOs and chairmen of corporates we're speaking to, is the fact that it's not necessarily a one-way, once and for all binary decision. You know, you could buy the asset back one day. And lastly, the thing that's really cool about it is that if you're a company that faces the consumer world, you can now actually let your customers, your employees, other stakeholders have a little share of a brand or a company that they feel associated with. That's a really new and useful thing for a lot of companies. And the other thing, of course, as Richard keeps reminding us to look at it from the investor's point of view, it's a huge market. 45% of all the real estate in the UK is still owned by its occupiers. And being able to bring that kit to the capital markets for the first time would be hugely attractive for investors. You know, product that they've never had the chance to invest in before could now become available. So it's really exciting for both sides.
So yeah, thank you to whoever posted that question. It was an anonymous a question. I don't know whether the panelists, you've been following the other questions, but there's one here from George Appley. He says, how does one deal with any historic liabilities the SPV may have when it's listed on IPSX? I think it's probably a question for Andrea, but you know, it's presumably no different to any other listing or purchasing of a company, and that information presumably goes into the prospectus.
That's correct. It's no different than any other company coming to market in London that may have, you know, historic liabilities or, you know, anything else that's gone on in the past. You know, those would be disclosed in the prospectus so investors understand what the historic position was, you know, and hopefully the property, the asset would be positioned in such a way that, you know, the risk of such liabilities would be minimized.
I guess if someone came to us, Andrea, and said, right, we've owned this property for 30 years and it's sitting in the company that acquired it however long ago, we might have a good look at it and say, actually, it'd be better to move it into a clean SPV, subject to all the sort of tax the implications that might have. But just like when you're deciding to buy or sell an SPV rather than the underlying asset, you always have a think, don't you, as to how dirty it is, and that might put a purchaser off or not.
Yeah, I mean, if it's been sitting in the same structure for 30 years, completely agree with you that looking at putting it into a clean SPV maybe the right approach.
Interesting that question comes from a W&I insurer, so he's probably interested. Is there any business that George is probably thinking for people like Locked and Howdens and others who operate in that market? So interesting thing to think about, perhaps how W&I might fit, but I think it's not the same, is it, as selling the company outright? So probably it's less relevant. Have we got any other one for you, Roger? I think, is it possible to acquire shares in an asset on IPSX through stocks and shares, ISA, or pension SIPs?
Yes, it is. That's one of the reasons why it took so long. It was so difficult to get FCA approval, because we wanted to make sure that absolutely anybody could buy these shares. So yeah, we will see a lot of people putting it into their SIPs and ISAs.
Another question. I think I better come back to the panel and let them have a final say on things that they might have wanted to get across, and we can come back to some of these questions. But I've been asked, please can the panelists comment on the benefits of IPSX wholesale as a structure of an onshore vehicle and tax transparency? Roger, would you like to comment on that one?
Yeah, Richard alluded to this earlier on. This is a trend which is gathering momentum, particularly post-COVID. We've seen a lot of government borrowing around the world, and people are beginning to pay attention to who pays their taxes and who doesn't, and how aggressive structuring is being done to avoid paying taxes. And a number of European countries, including Scotland, have now passed legislation banning any state aid of any sort, loans, furlough schemes, anything, to companies that are using offshore structures to avoid paying tax. Now, we know that BEPS, the base erosion profit shifting rules, came in last year that have started to pull offshore real estate back into onshore UK tax regime. But as Richard said earlier on, what people should really be doing now is, rather than holding things offshore in traditional private equity structures, they should just be becoming a REIT, because REITs are taxed in the UK. It just so happens that their tax rate is 0. So everybody's happy. And of course, wholesale provides the opportunity to be a REIT. And you mentioned earlier on, Hoppo, that you have to sell 25% of the shares to go onto our prime market. One of the important functions of our wholesale market is there's no prescribed minimum free float. And in certain circumstances, too complex to go into here, but I'm happy to explain offline to anyone. In certain circumstances, you could sell as little as 1% of your asset and become a REIT on our wholesale exchange.
That's,
onshore way forward.
It'd be interesting, because REITs have restrictions on the amount of leverage they can use. Andrew, what are the limitations for prime and wholesale and leverage on IPSX?
Sure. So prime, the loan to value ratio for prime is limited to 40%, and for wholesale, it's 80%.
Okay, so there's relevant considerations in terms of returns and the like. But before I sort of carry on with questions, panelists, is there anything particular you want to get off your chest that you think we haven't covered, that because I failed to ask the question?
Somebody's asked, will IPSX be affected by a hard Brexit and the impact of the withdrawal of European regulations such as AFID? So, Rog.
That's one I felt quite sure you might have a view on.
Oh yeah, I do have a view on, but the answer was initially no, because the exchange is geared towards a British market and British assets, and so it's sort of self-contained. So it shouldn't. If we wanted to expand the exchange into Europe, which we do, then yes, of course, it will have an impact. But at the moment, the exchange is a UK exchange, primarily targeting UK assets. So right now, despite that a hard Brexit makes as much sense as repeatedly slamming your hand in a car door, it shouldn't have too much of an impact.
Roger, what does the international stand for? I mean, the I is international, isn't it?
It is international. It's the International Property Securities Exchange. And as Richard hints at there, definitely we have plans to expand internationally in Europe, in Asia, in the US. And, you know, in the long
Antarctica, though, Roger.
Not yet, no.
But currently, though, you couldn't list a nice building in Berlin on your exchange? You could?
You know, it's a stock exchange, right? So you can list companies in any currency, by the way. So you can list in euros, dollars, Hong Kong dollars. You can list any currency and the asset. So the company will be listed in London. It can own assets around the world.
So coming back to the point about the portfolio, you could have headquarter buildings of a company that operates in different jurisdictions across Europe and list them all on IPSX.
Yeah, you could. I mean, that's starting to get quite
complicated. But if you were doing a sale and lease back and you decided I want to raise capital on 2 or 3 of my office buildings that I occupy, or it could be a factory, it could be anything. You could do that across more than just your UK assets.
You could.
Right. Have we got any other?
Yeah, there are two other questions. So could one forward fund a prime London hotel development on IPSX that is pre-let for 30 years with CPI annual indexation? Rog?
Yeah. I mean, our prime market is designed for stabilized income producing assets. Wholesale, absolutely, can have any sort of real estate strategy. It's limited to not being available to retail investors. It's only for professional and institutional investors. And that means that they're able to assess higher risks for themselves. That's the FCA's view. So yes, on wholesale, you could forward fund an asset like that.
There's a question, I think, for Dan here. How will the valuation process work? Valuation typically lags the market due to its reliance on completed transactions. How can investors be confident that they're investing at an accurate reflection of current market value?
I think that's a good point, and key to any valuation is reliance on those comps of completed transactions. So, you know, those do form a big part of the valuation. If you consider the current situation that we would, you know, we're valuing as today, and the comps would have been from this year, then if we didn't reflect market sentiment, that would be incorrect. So yes, you are relying on completed transactions, but another big part of the valuation is considering the sentiment and what's.
I think that's misunderstanding the benefit of the exchange, because the benefit of the exchange, A, is daily trading, but B, you know, the income itself is becoming the asset as well as the building. And so, you know, truthfully, the historic manner of valuing real estate is probably a little bit outdated in this market, and the IPSX should make it considerably more efficient because there's a daily trade at a valuation.
And people will start, I mean, we see this, we've seen it in the US for decades, and we see it in some of the newer, more specialized REITs that effectively listed markets are moving towards earnings multiples as a way, and they should, because that's how every other sector that's listed trades. You know, real estate's really weird in that it's the one sector where we tell people what something is worth. You know, the one thing Richard can't control in his business is what your valuers say the assets are worth. You can affect everything else. You can talk to your tenants, you can re-gear leases, you can manage everything in your business apart from what the external valuers say the value is. And the stock market...
Real estate stocks, they are simply the value, the true value, is what somebody will sell it for and what somebody will pay it for. And, you know, and the Red Book valuation is somebody else's opinion of what those two events might be. You know, we've sold 250 million euros of assets in the last 4 months for numbers above valuation. You know, the reality is, you know, the demand for income is such that, you know, particularly our industrial assets, we've been selling substantially above valuation, all the last valuations we had done. So, you know, the reality is my opinion, one of the reasons that I'm so excited about IPSX is actually it's bringing real estate valuation into the 20th and then the 21st century from the 19th century where it's currently stuck.
There's an interesting question come in. I think we sort of touched on it a little bit earlier. I mentioned funds closing, but will IPSX be the solution for the problems of the open-ended funds? And presumably people, instead of investing in those, more likely to think, well, I've got more liquidity and more control by buying shares on companies listed on IPSX.
It is.
Nobody will invest in those open-ended funds. When I talk today, nobody would invest in them. When I talk to IFAs, retail advisors, they say that real estate as an asset class, because they just look at the retail open-ended funds, as an asset class, it's pretty much uninvestable today. Those open-ended funds are broken and not fit for purpose. So yeah, we are the solution to that.
And one of the reasons that I invested in IPSX, both personally and professionally, and again, as excited as I am, is precisely because of that. You know, there's a great big sector. You know, why do people invest in open-ended funds? Because the general public want to invest in commercial real estate. And that was one of the routes. Well, it's a rubbish route. We have a much better proposition. So yeah, there are many reasons to be excited by IPSX.
So I think that probably brings us close to concluding. I mean, thank you, panelists, for your input today. I think we've heard, we're getting very close, hopefully towards the end of this next few months, we'll hear of some successful IPOs having taken place, and then the floodgates will open, and we are going to get very busy, I hope. Please, if you're on the call and you want more information, do please contact me or Andrea or IPSX. I'm sure also happy to deal with questions from time to time. Before we sort of sign off, we're going to put another question to the audience today, which is, having heard the session today, if you had an asset or were advising on an asset that was suitable for admission, would you now consider IPSX as an option for financing real estate?
Cass, can you answer for us? Yes.
Did I see? Oh, here we are. Oh, look. So we've moved the needle. So we've obviously done something right. And we haven't lost many more participants. So I'm very grateful to all of those who've stayed the course, although I suppose some could have come in and some have gone out during the process. As I say, hopefully you've worked out who we all are, where we are, if you need to speak to us. Very happy to take questions offline. Thank you to those of you who have posed some very interesting questions as well. Hopefully you found the answers helpful. Thank you to IPSX and for Kevin in the background for running the questions and slides. And once again, thank you to Dan Bishop, Andrew Tompkins, Roger Clark, and Richard Croft for your time this morning. And presumably, I think this may even have been recorded. No, yes, it was recorded. So no doubt it will appear either on the IPSX website if you want to go back and listen again for some reason. But otherwise, thank you very much for joining. Thank you.
Thank you.
Thanks, Hopper. Goodbye, everyone.
Thanks, everyone.
Bye all.
Bye.